Dan, thank you for joining me. You're a global mobility expert at Tax Advisory Partnership, I believe. If you'd just like to introduce yourself very quickly.
Yeah, sure. Yeah, so I'm Dan. I'm the partner in the global mobility tax team here at TAP. So, yeah, my specialism and background is working with businesses and individuals, mainly the businesses from a kind of an employer perspective, if they're kind of like relocating their employees from A to B, or as is sort of more common post-pandemic, remote working or kind of cross-border working, where you've got someone living in one country but performing duties in another, or kind of senior individuals who travel quite extensively as part of their role. It's kind of helping the businesses manage everything from an employment tax perspective and doing the right things in the right countries, and also the individuals themselves that are affected.
So, my understanding is that, especially since COVID, more people are looking to work internationally. People realize that they can work from home,
Yeah.
and then they started asking that question of, well, if I can work from home, then I can work from another country.
Yeah.
Are you seeing that trend? Is that a trend
Oh,
that has been developed
yeah.
over?
Yeah, hugely. Like it was obviously happening. Like remote working is not a new concept by any stretch, and it was kind of happening pre-pandemic. But obviously, kind of sort of COVID was kind of like the big explosion that kind of people realised, and well, businesses realised pretty much overnight as well. Is look, we can function remotely. Like unless you're obviously like a construction business where you need kind of like the boots on the ground. Like people that kind of plug in a laptop can be pretty effective anywhere in the world. And kind of when the kind of travel restrictions went in, you had a lot of people that had kind of like family in another country. When they realised they were going to be kind of locked down for an extended period of time, kind of quite rightly went, well, can I do it where my family are and travelling? And a lot of businesses were kind of saying, yes, if you can get there. And then, yeah, cut to 2 years later, you had a lot of employees kind of sort of quite rightly go in, hey, look, I can do my job just as well from here, whether it's in the UK or another country. Like the business isn't impacted, and I think businesses were quite pleasantly surprised how not little they were impacted, because obviously they are, but the disruption was probably less than probably what they were expecting. So a lot of businesses were quite amenable to allowing their employees to kind of continue working remotely in some way, shape or form. Businesses that weren't, that sort of tried to drag everyone back to the office, found that they were losing their staff en masse. They kind of realised, right, okay, even if we don't want to allow our staff, we kind of have to allow it in some capacity. So yeah, the landscape's changed. I'd say it's kind of settled into some sort of normality, for want of a better phrase now. But yeah, the complexities, especially the international side of it, are kind of still there. And I think a lot of businesses, when they kind of realised they needed to do it, were wrestling with a lot of compliance that they didn't necessarily foresee before they said yes.
Uh, Thank you. So yeah, I mean, this conversation I would like to break into kind of two sections. The first, looking at the strategy and compliance that companies face, and then the second, the people and policy. So I'm going to ask serious questions about how a company goes about basically starting that process of people moving people abroad and allowing them to work from abroad. So the first question really is how does a company move an employee to another country legally?
So legally, the most important thing is, do they actually have the right to work there? And I think there's a lot of misnomers with kind of what people are and aren't allowed to do under kind of sort of like the tourist visa or whatever you want to call it. Because the definition of work is actually kind of like quite narrow. People working remotely, especially for Brits post-Brexit, like they aren't actually really, if you look at it strictly, probably shouldn't actually be doing their role kind of long term without a work permit. So for businesses, especially, making sure that your staff have the right to actually do what they are doing in that jurisdiction is the first thing to check. And it has kind of like caught quite a few businesses out as well by not doing kind of the necessary checks and just assuming it's okay when it's not. So that is definitely the most important thing. Then you've got the knock-on kind of compliance that goes with it around potential permanent establishment issues that can create kind of compliance for the business.
So I can just digging into that. I can work technically from anywhere in the world. but I am conscious that if I would decide to go to America for, say, a month, that technically I probably shouldn't work there. Is that correct? If I'm on a tourist visa,
It's
I shouldn't really be opening my laptop to work as a permanent.
Yeah, in theory, I mean, I'm not an immigration expert whatsoever, but yeah, the drive of that question when you go through customs, especially I mean in the US, they're quite scary custom officials as well. It's kind of what is the purpose of your visit? It's like strictly if you are there kind of on holiday, you shouldn't really be working in a kind of proper capacity.
Okay, it's good to know actually. So, do I? Does a company need to set up a local entity to employ someone in in another country?
No, not necessarily. It kind of it depends on the location and jurisdiction, and it's always with these things. It's always kind of better to plan in advance and double check these things. It's quite common for an entity, say a UK company, to have kind of someone working remotely in another country and doesn't have any corporate presence, or have someone working in the UK remotely for them, and they're not creating any presence in the UK. It's always better to check because it very much depends on what the individual is doing, for how long. If it's more than one individual, it creates kind of a higher risk profile, and potentially creating a permanent establishment, which is basically a kind of like a corporate entity that is taxable for corporation tax purposes, and that results in kind of a lot of company filings and potentially having to set up things like payrolls. But you don't necessarily need an entity in that country for someone to go and work there, especially not on a short-term basis.
So, okay, so people have decided that they want to live abroad, but you're a company that's thinking about sending maybe more than one person. So, what are the implications for establishing a permanent entity in another country?
Well, first, it's sort of more for tax purposes anyway. It sort of creates a kind of like a taxable corporate presence, whether that's a kind of a subsidiary of another company or a branch. So yeah, it kind of, well, first and foremost, it means that they're subject to kind of corporation tax in that location. And it might be, if you've got individuals already on the ground, this is why it's always better to check before as well, as by virtue of what they're doing there. They might have already established a corporate presence, especially if you've got, it can differ from country to country, but if you've got someone that's kind of fairly senior and they're out going and signing contracts, that's typically what can create a taxable presence. And what it means is that an element of it's essentially whatever profit is being derived in that country is therefore subject to corporation tax there. And then it can, from an employer perspective as well, it can mean that there's like payroll registrations that need to happen. The individuals themselves can be subject to like local withholding taxes, potentially social security as well. So again, with any of these things, doing as much kind of pre-planning as you can and understanding what might happen in the future and planning for that eventuality rather than realising that you've got a problem down the line is always important, because yeah, some jurisdictions can be really strict as well, and kind of worst case scenario can ban people or the business from doing work in a location.
So you touched on social security there. So payroll and things like that. What are the overall tax implications for both an individual and for a company?
A lot of it depends on how long an individual is working in a location for, because the UK has a double taxation agreement with most countries. There's a few exceptions, but a lot of them, and they are again sort of country specific. And there's a bit of a misnomer about the 183-day rule, which it seems like a lot of people have heard of, but a lot of people don't understand that there's a few nuances to that. But you can have individuals that can, if other conditions are met, work in a location for up to 183 days without creating any kind of income tax charge for that person as an individual. And similarly, like social security, even though it is another tax, the rules are different, but there are, for people working on a short-term basis, if you look at kind of what social security is for, it's to essentially kind of get yourself a state pension, your kind of healthcare back in your home country. So kind of authorities want people to be paying into kind of like the right system in inverted commas. So for short-term, people that are working somewhere short-term, the social security agreements usually mean that they stay within their home country, but for people that are relocating, especially like on a permanent basis, the social security does switch and can switch from day one. And this is where a lot of businesses, especially the remote workers, are getting caught out because the social security rates vary wildly. I mean, even in Europe, and there's been a lot of noise in the press about the UK employer rate going up to 15% from 13.8. But Spain and France can be 35%, even like 40% employer charge. So I've had clients that have had people come out the woodwork 2-3 years down the line that have been working remotely basically since COVID and have landed their employer with 2-3 years worth of employer social security at 40% in Spain or somewhere like that. So it's those kind of things which are important for employers to think about.
Because that, again, that is I'm aware of this happening as well, where someone, say for example, a company that I'm aware of, a Polish employee who used to be based in London, worked in London, but just happened to go home and get stuck in their home country of Poland. They continued working from there, and they decided that they wanted to stay there indefinitely, and the company, without really thinking about it, just went, great, carry on. That's what you're talking about there, isn't it? Essentially, it's that almost accidental acceptance that, oh, well, they're in their home country, therefore, but no one really knows that they've moved back.
Yeah, exactly. And I mean, it's quite difficult with a lot of remote working, it was the employees that were kind of making their own decisions and doing it without necessarily informing their line manager or HR and kind of the right decision makers saying yes to it. Because with the social security agreements, short term, if you had even this individual, if they're a UK employee paying UK national insurance, even if they knew they're going to go to Poland for a year, you can get what's called an A1 certificate, which essentially keeps you paying social security where you're normally employed and working. So that can be obtained up to 2 years. Or if you've got someone that lives in one country but spends time working in another, can get a different type of A1 that just keeps them paying in their home country. But if you've got someone that decides that, right, okay, I'm going to carry on working for the same UK business, but I'm going to do it remotely in Poland in this case, and it is indefinite, the social security switches from day one, and it doesn't matter whether there's any kind of corporate presence existing in Poland, or even if there's one created, the social security liability switches for both the individual and the employer at the same time, and that's where employers are getting caught out, because they just think, okay, they're on the UK payroll, they're still paying pay as you earn, potentially, they're still paying national insurance, it's fine, and that's where the thinking ends. But they should be registering in Poland, even as a non-resident employer, and taking steps to pay across the contributions there rather than in the UK.
Okay, so how essentially we kind of talked there about like what the accidental side of it, but what can a company do in a positive, like what should they be investigating to make sure that they're doing things correctly, whether or not that's staying on the home country payroll or whether or not it's local payroll? Is there anything they could be doing?
Again, it's that kind of sort of proactive planning, because there always is going to be an element of admin to it, and probably like an additional level of cost. But kind of if you take the right steps beforehand, you kind of can mitigate what they are. There's a lot more sort of potential solutions on the market, like an employer of record is one that's kind of become quite popular kind of since the pandemic. Again, they're not kind of a new concept, but they're essentially employing entities that will employ that individual for you and will look after kind of all the payroll, the employer reporting, and then essentially sort of lease that employee back to the business. They're not a perfect solution in all cases, but they certainly are kind of a pretty good solution, especially if you are a business that does have people kind of working globally and does have people that kind of want to go and work kind of all over.
So that's kind of looking at the tax side of things. Now, I appreciate that you're not a lawyer, but
Very much not a lawyer.
Very much not a lawyer, and obviously going into employment contracts, things like that is not. We can't give formal advice or anything like that. But presumably, you've come across the nuances of different employment laws in different countries. From your experience, how do companies? You can say I don't want to answer this if you want, but how can companies overcome the difference in employment contracts from a kind of like team perspective? So say, for example, an American comes over to the UK because they've got family here or something like that, wants to work. Obviously, the holiday agreements in the US are very different to the UK.
Yes.
How does a company, not necessarily from a legal perspective, but from a just general global mobility point of view, deal with that scenario?
It depends how sort of long they're going to be here for. But if you've got someone sort of working longer term in the UK, it's a US employee, then you need to make sure that what they're entitled to contractually is also compliant for UK employment law purposes. And the way that it's typically done is like if you've got a formal assignment, is to have a kind of an overarching assignment letter that kind of sort of takes precedent, sort of sits alongside the existing employment contract, but just make sure that that individual is entitled to the statutory UK holiday, the working hours, and all the kind of like anything that's required by employment law. But it is, again, it's another thing that can be a bit of an afterthought that I've seen with some clients and businesses as well, that just kind of think that, okay, they're still working for that business, they're still reporting back into that business, nothing changes, there is still a legal contract there, but because they work in another jurisdiction, if it is going to be longer term or indefinite, that contract does need to also be compliant for employment law purposes, and there's wider things even outside of that as well. You've got data protection issues, like if they are accessing kind of confidential documents or information in another jurisdiction, are they allowed to? Certain industries, you need to have a specific license to be able to do certain activities in that country that they might not have. There was quite a, say high profile, but kind of high profile for mobility advisors, where there was a Swiss business that had a Swiss employee that was working remotely in Sri Lanka, I think it was. It was horrible, but I think it was involved in a car accident and needed sort of some quite major surgery. And the Swiss business tried to claim for the cost of their care under the private medical insurance that this employee had, and the cover didn't cover him outside of Switzerland. And it's kind of those things that kind of employers don't realise, that they need to look at everything in the whole when it comes to allowing people to work outside a jurisdiction that they're employed. And I think people realising, kind of when we came out of the pandemic, that as long as they've got their laptop they can plug in, they're working between the hours we want them to, end of story. There's a lot more little things that are kind of, probably because things like this, the unfortunate, is now happening the longer it goes on, that employers are realising, okay, there's more to this than meets the eye, and we need to make sure that we're managing this proactively.
So what about in a short-term scenario? So say, for example, you have an employee who's actually globally mobile, as in he doesn't technically have a base in any particular country, but he might spend a month here, a month there, a month there, a month there. How does that get covered? What's the scenario there when they have no real home office?
Yeah. Tricky. I mean, it's probably quite very rare.
So I thought about that because I suddenly thought, well, actually, yeah, when people travel more, the risk of something happening increases, obviously. So how do you incorporate that into a global mobility policy?
With difficulty. It's sort of just making sure you've ticked as many boxes as you can really. I mean, everyone has to have, is employed by an entity, obviously, like I said, yeah, sort of like self-employed, but they will have kind of a base or a main office. That individual, I mean, they will likely be tax resident somewhere as well. I don't think I've ever come across someone where they are non-resident in any jurisdiction, but even then they don't have the protection of the double tax treaty. But with an individual like that, it's just making sure that you know where they are, where they're working, understand any kind of local nuances, and things like the insurance policies, the employment contracts, just making sure they're as thorough as they possibly can be.
I'm going to jump another one on you now. So you've mentioned tax residency. We get people making inquiries and say, well, I spend time here, I spend time here, and I spend time here. I'm never in one place for more than, say, 90 days. Quite often it's like 60 days. Am I not tax resident anywhere, and does that mean that I don't have to pay tax? Obviously, that's from a personal perspective, but what about from an employer's perspective as well?
So again, it depends kind of who the employee and entity is, because they will need to be paid from somewhere. So they will be on a payroll, and the default position if you're on a payroll is that there's usually, depending on obviously the country, but there's normally tax and probably social security as well withheld at source. And depending on the jurisdiction, it can be quite difficult to get those withholdings turned off, and it would be down to the individual to kind of file a tax return to claim any tax back. For an individual that thinks they are non-resident and therefore non-taxable in every single country, the first rule in basically all the double tax treaties to get relief is that you basically need to be resident in the country that country has a double tax treaty with. So if you're not domestically resident anywhere, you're just taxed as a non-resident. Even if you are non-resident, you're just taxed as a non-resident, which means you're essentially taxed on the days you work there. So yeah, I think people think that they might fly under the radar in 12 different jurisdictions by working a month there are unfortunately slightly misguided.
So what does, keep chucking them at you, what does someone do in that scenario? Because the logic is that, well, I suppose at some point you appear on someone's radar, and my understanding is that the data sharing between different countries is increasing, whether that's through banks, whether that's governments, anything like that. So while maybe 20 years ago you could probably get away with something just by, well, the lack of data sharing, and I don't know, but now there is so much data being shared between governments, tax, it's too risky, right?
Yeah, exactly. That exchange of information is, yeah, as you just said, is increasing all the time. The technology is becoming more sophisticated. Every passport is scanned in and out now, so there is a digital footprint for every individual. I mean, people might not like it, it might be a big brotherish, but authorities pretty much do have a record, and yeah, like you say, that those days of people being able to, I mean, even people on kind of like private jets or helicopters being able to kind of think that they are not being noticed, are being noticed. And just from if you just look at it from a UK perspective, the UK authorities are sending what we refer to as like kind of nudge letters, or kind of a not being particularly accusatory or saying we know about something, but almost there, do you want to, we've got some information, do you want to, we're giving you an opportunity to essentially come clean before we come after you. And this is potentially from information from like income or assets that people hold overseas, that it might not be, I mean, even pre-remittance basis, that might not have even touched like the UK banking system, but obviously HMRC have got some data from somewhere that suggests that they know about something that someone may or might not have in another jurisdiction. So we don't know for sure exactly kind of what information they share, how frequently, etc., or how easily it is to access it. But yeah, certainly it's more readily available than it ever has been, and that's only going to go in one direction.
Okay, thank you very much. So from a people and policy perspective, so obviously there are costs associated to moving people abroad. When an employee approaches someone, or when a company says, do you know what, we need to set up a presence somewhere, what costs is a company likely to incur when relocating someone internationally?
From a sort of like a policy, what would they provide to a mover?
Yeah, so thinking around like what can a company be expected to kind of offer, what kind of like professional services costs could you kind of expect? I'm not expecting numbers, but just kind of like what kind of like things can you expect to have to pay for?
It depends on kind of the driver of the move. So it's sort of traditionally kind of any kind of employee relocation was very sort of like business driven, and there was a business need, and they wanted to kind of expand into any market, or they kind of want a specific project and needed one of their senior people to kind of be on the ground, and the kind of packages that were being offered were kind of quite generous, and they would usually give them, depending on the location, there might be a kind of like a cost of living allowance if they go into a kind of a higher cost location, maybe like an assignment, sort of like spot bonus as like an incentive to take up the assignment, or kind of a post-completion one. They would offer typically kind of like housing in the host location. If they're moving with family, usually some sort of like schooling for finding an international school if it's somewhere where it's a non-English speaking country, kind of like cultural training and sort of settling in and kind of using a kind of a relocation agency or business to actually kind of help facilitate the move from A to B. That's kind of like helping them do the actual move from the home country and then finding somewhere where they're moving to and kind of take as much of that pain away and the business paying for it. Definitely kind of sort of seen that change kind of more recently, and a lot of that, it's kind of twofold. A lot of the moves that we're seeing now, way more are kind of employee driven, and individuals, especially kind of like the younger generation, like they want to move abroad. They want that experience of whether it's, even if it's not working in another country, they want to live in another country for a little bit, they want to learn another language, they realise that it's good for their career. Obviously, if it's employee-led, the employer are kind of less willing to kind of sort of fund as much as they sort of previously were. Like, you'll still typically sort of see some sort of potential kind of little budget for getting them from A to B and maybe sort of a bit temporary, like a month's worth of housing until they kind of sort of find something more permanently. But yeah, the kind of the cost of what employers are providing now is definitely kind of less than it used to be. Yeah, trying to sort of think of other things that we typically see provided.
In terms of tax, so when an employee approaches, like what could an employee expect an employer to offer from a tax help? Because obviously they're going to need some kind of local tax help as well as home tax help, but there's also obviously corporation tax issues as well, company tax issues. So where would you say the balance lies with regards to who should take responsibility for what? Because it's quite an expensive thing for an individual to take on to get formal tax advice. But could they expect a company to do it? And actually, does that assist with the relocation, but also employee productivity and work satisfaction?
Yeah, sure. Again, it sort of depends on the driver of the move. It's very like if it's a business reason for the move, then they will usually support at least kind of the first year. If it's an assignment, they will typically kind of support every year that they're there in kind of home and host country, especially on the tax policy. Like if they're tax equalised, which essentially means it's the employer that kind of funds the tax in the host location. It's in their interest to kind of fund that for them anyway. If it's an employee-driven move, they might potentially offer kind of that year of transfer just to kind of help them make sure that they're, again, like if they, I think you just touched on it, where if they want to be concentrating on doing their job, they don't necessarily want to be thinking about filing their tax returns, especially in the country that they've moved to, because it's probably something that they know very little to nothing about, and having a bit of hand-holding in that first year to kind of do it for them is kind of like a nice thing to offer. Kind of increasingly seeing as well employers offering a kind of like a lump sum relocation allowance for the individuals to kind of spend as they want, and kind of encouraging them to use an element of that towards some sort of tax advice, whether it's kind of sort of sitting down with someone like myself kind of before or shortly after the move to make sure they understand the implications, but also kind of just helping them with especially their first year tax filings, because yeah, they're not straightforward, and especially you've got people that are spending time back in the country they've moved from. There are sort of intricacies with kind of residency rules and things like that, which can get quite tricky if you've got two locations trying to tax you on the same thing at once, that you sort of need an expert to help you with.
And where, like, if you get it wrong, where does the burden of responsibility fall, like from a punishment point of view? Because ultimately that's going to drive who actually takes responsibility, right?
It depends what it is. So the payroll, so any withholding is the employer obligation, which is where the kind of the tax is paid across in the first instance, and also like social security, that's pretty much the only kind of withholding mechanism. So if a business has an employee that's working in a jurisdiction and they're not withholding tax or social security when they should, it is the employer, the business, that the authorities will come after, even if it's for the income tax and the employee social security element. It's the employer that will have to fund that in the first instance and try and claw the employee portion back. The actual individual filing, that is down to the individual themselves. So it's both is the answer to that question. The employers, it's very much check if there's what the payroll obligations are. Do you need to get something set up? Because if you have to do it retrospectively and backdated, there's usually penalties and interest applied as well, and the longer it goes on, the more costly it can be. And then for the individuals, it's just making sure that they understand what their responsibilities are, what the deadlines are, what records they need to keep.
So just slight following on from that, how does a government or a tax agency in another country come after you if you haven't got a legal... It's obviously a company is a legal entity. So how do they come after a legal entity that's not actually physically based in that home country, and can they do that?
They can. It obviously makes it more difficult if they don't have any presence in there. If you've got an existing multinational, then they will go to kind of the existing kind of corporate presence that they've got in that country. Again, this is where this sort of like share of information comes in as well, where you kind of have seen in practice as well, where that country's authorities can lean on HMRC to sort of try to sue that entity. It does obviously make it more difficult. It's not impossible, but it's becoming easier to do it.
And my kind of like leading point there is that it's better to be pre-prepared, because ultimately the implications of getting it wrong are only actually going to get exacerbate. They're only going to get worse over time.
Yeah, exactly. And kind of if you're a business that kind of has kind of long-term aspirations to do business in that jurisdiction, kind of the last thing you want to be doing is upsetting that country's authorities early doors, and they can, depending on where it is, like they can play hardball and make it very difficult for you to operate, or like not grant visas potentially and things like that. So even if you may want to go under the radar, then it's probably not in a kind of long-term interest to do so. It's better to, even if it is a pain to do these things, then it's better just to kind of sort of suck up that pain as early as possible, rather than get a letter saying we know you're doing this, or have a backdated bill with penalties and interest, and then the kind of difficulty of kind of continuing to operate, or as it's becoming more common now as well, the sort of naming and shaming for businesses for not being compliant, whether it's for tax or immigration purposes. The last thing a business wants is, I mean, some are quite happy just to pay a backdated tax bill, but seeing the name in press is not a good thing that any business wants. So there's a lot to weigh up when businesses are kind of making that kind of sort of strategic kind of commercial decision of what to do, whether to kind of add an additional cost up front to do it and kind of keep their fingers crossed that it won't get picked up on, or just to whether to just kind of sort of suck it up and do what they're supposed to do from day one.
I mean, that's always better, right? But going back to what we talked about earlier, say an employee just does it, has just, I'm just going to stay here, basically, stay in Spain or whatever, stay in the UAE, stay in Dubai. What's the first thing a company or someone in the company should do, whether it's HR or whatever? What's the first thing they should do when they find out an employee has actually just done it?
It's understand the risk that's been created by virtue of what they're doing. Take professional advice in pretty much every area, from the tax side of it, the immigration, like should they have been doing what they've been doing for as long as they have been, and I mean, especially from an employment law perspective as well, because it depends whether the business are kind of willing to let them continue to do it. And if they're not, like I've been involved in some sort of quite awkward, delicate conversations where kind of businesses are right, well, we want them to come back, and essentially if they refuse to, like, well, what do we do if they refuse? And it's right, well, we get rid of them. It's like, right, okay, how do we get rid of them? And right, okay, what jurisdictions, employment law are we covered by? Basically, if they try and sue us, what country's court could we potentially end up on, and where do we stand? So I'll probably say like the tax side of it is probably kind of lower down the list of priorities of the businesses with that. It's get expert advice, find out where you stand from an employer perspective across the board, and take it from there.
Okay, and say you're a company that, so we talked about quite a bit about individuals kind of driving the move, but if you're a company that is looking to establish a presence in another country, and therefore you're going to need employees in that country as well as setting up a legal entity, is it better to relocate existing employees, or is it better to kind of look locally, either get contractors or employ locally into the new entity?
It depends where the sort of talent is, essentially. Quite frequently what we see, especially if it's a business that's expanding into a new jurisdiction, is you will typically see existing employees that go out there to kind of establish kind of the office or the site, whatever it is, and help get that off the ground. It's usually then kind of cheaper to hire locally, especially if you know that, depending on kind of when that corporate entity is set up, because you can then kind of engage them through that entity. You've not got the cost of like the physical relocation from A to B, but it's very kind of case by case specific on kind of what is best. But just purely looking at it from kind of like an admin and relocation and tax cost, it's local hires are usually cheaper.
So, I mean, my perspective as someone who runs an international business, who's very focused on brand and brand values and kind of customer service, it is that hybrid approach. If I was setting up somewhere, I would want someone who understands my brand values to be on the ground to set it up.
Yeah, exactly.
Yeah.
And then once it's there and everything's up and running, it's usually when you see the business is starting to hire locally, and it can depend on the sector. There just might not be that the expertise there locally, so they do need to relocate kind of more existing employees over there. But it's usually kind of like a hybrid. But once you've got the business embedded in that jurisdiction, is usually when you kind of sort of see more local hires than kind of a higher volume of assignees going in there.
Brilliant. Dan, sorry. Thank you so much for that. It's really interesting.